Hey, it's Matt with PriceActionTradingSystem.com, and it is Wednesday. It's March 25th. This will be our chart lesson for the day. And real quickly, a couple of people actually have asked me in the last few days if I'm going to go back to going over the trades. If they prefer that, they miss me marking the trades every day and showing them where the trades were. And I get that. Actually, I'd prefer to do that myself, but we'll probably continue to do what I've been doing lately until the market kind of gets back to normal because it takes so long to go over the trades. And if I just go over a few early in the morning, then somebody else will want to know about the others. And so if you got a trade that's really bugging you and you just got to know, send it to me and explain it, and I'll try to give you my thoughts on it. But we will go back to our normal everyday routine that we've been doing for the last 8 years or so. When this thing settles down, when that's going to be, I don't know, but we'll get back to it. I promise you. I prefer to do I think it's more helpful, really. It's really a mixed bag. You get a lot of the newbies, the newer people that are coming into this. They prefer doing what we're doing here because they don't they don't know all these things. And those of you that have been around, you're way past that. So this is more, this is probably boring for you, and you're wanting more help with the individual trade. So I get it. It's a mixed bag, and I try to do a little bit of all of it for everybody. But for now, we'll probably continue to do what we're doing here, talking about the day overall, me showing you some different things that I think are critical or important. And there's a couple of them we'll talk about today. And anytime I show people little tricks and new things, it's to help you. But what usually happens is the newbies, they think it's again something magical and they go try to do it and they have lots of losing trades. So if you don't enter a trade at the right place in the right context, doesn't matter whether it's a second entry or a failure or an outside bar. That I showed the little trick yesterday about trade, if it broke lower first and then went out the upper side of the bar. And lo and behold, I got 3 or 4 emails today of people using that strategy and it failing and them not can't figure out why. And the trade is it's just not a good trade. Um, and so there is no holy grail at this. So make sure you understand that. You could, if you're entering at the right place, you could probably throw a dart at the board and 9 times out of 10 have a winning trade. But guess what? If you're entering in the wrong place under the wrong context, there is no holy grail that's going to fix that trade for you and turn it into a winner. Now, on the other hand, something else that I did want to talk about today is that sometimes you will get lucky and have a winning trade even though you did everything wrong. And that's one of the reasons why it's so important. If you want to get better at this, the way you get better, simply sitting here and trading blindly all day, every day, and then then closing up and going home at the end of the day will never make you a better trader. Never. What makes you a better trader is sitting here trading every day, get as much screen time and taking as many trades as you can. By all means, only take trades that you think you're doing the right thing. Follow the rules, try to take the proper trades, but try to trade as much as you can every day. But where the real work comes in, and I say this all the time, but people just do not hear it, is studying every single trade at the end of the day, even the good ones, or I shouldn't say the good ones, but even the ones you win at. Because if you have a winning trade and you did everything wrong, what do you think that's going to do for you? It's going to reinforce horrible bad habits, and you're going to try that same trade again, and it's going to fail the next time, 9, 10 times you try to take it. And so make sure that you trade and get as much screen time. But look, I'm telling you, where you become successful at this is the work you put in at the end of the day. Your day's just starting at the end of the trading day. And if you're not studying your charts and your trades, and trying to figure out what you did right and what you did wrong and learning your tendencies and correcting them, you're just not going to get better at this. It's just simple as that. Um, you know, if you're sitting there, I like to use musical instruments. That's one of the analogies I like to use. But if you're sitting there playing the piano every day and you don't have a good ear for music and you're hitting the wrong key every time and you're practicing and you think you're doing well, I mean, I can't play a musical instrument, so I can't say, but I would assume that you need somebody listening or you need to be recording it and play it back to yourself. Because if you're sitting there playing and you think you're playing smooth, perfect, you know, in tune keys and you're not, then what good's it doing you to practice? You need to be practicing to learn to hit the right keys. And it's the same thing in trading. You need to rehash your trading to make sure you're doing the right things, because that is what makes you better. Just trading, just blindly trading every day and then wrapping up at the end of the day, you can do that for years and never learn a thing, I promise you. And people don't want to listen to that for whatever reason, or they don't hear that, but that's a very important piece of it. So make sure that you're studying your work at the end of every day. You want to do two things. You want to go through every trade you took, look at it, make sure you were doing the right things, and the things you did good at, do more. You know, let that lock that in, try to do more of it. Where you screwed up, try to correct that going forward. And you may have the same. What you'll find out is you'll have a few little hang-ups that will be the important areas that you'll have to work on extra hard. And we all have them. Mine used to be I would move my stop. I'd give it a little more room. And guess what? 9 times out of 10, I would move my stop and give it a little more room, and I'd be right. And all I did was reinforce a horrible habit. And eventually, it won't come back. And in a day or two, you've blown a whole account. Or maybe that same day, you've blown most of your account. So you can't reinforce bad habits. I know that firsthand. I've been there. I've done that. So I can tell you that through experience. But the other thing I want to talk about again is the key entry points. We talked about these yesterday. Most all your trades are going to come at the key entry points. Where are the key entry points? The trend lines, the EMA, the midlines in some cases, and support and resist, the horizontal support resistance. And again, a trend line is just a slanted support and resistance. And it's no different than this one, except it's just on an angle. And the one thing you always have to remember on these channels, the midlines are the least reliable. You'll get good setups off of them when the market's strong or really weak if it's going down like here. But you will get more failures off the midlines than anywhere. Same thing in this range. There's midlines in this range. And you'll get more failures off those midlines. This is this morning's range, and I'm going to talk about this one because somebody sent me an email. That's probably your midpoint right in there. So you're going to have more failures at that midpoint than anything. The way you trade this range is that you look to buy setups off the key entry point, which is the support area right across here, and the resistance area right across here. Well, I had a trader contact me, and he went short right here. He treated this like a failed second entry long, I think, or maybe it was a second entry short too, and he went short right there, and it instantly failed and went straight up. Instantly failed and went straight up. And he wanted to know, he says, well, I went short off the resistance, which there is some resistance there, but this is what prices were doing. We're playing off that midline right there. That midline, when prices push through it, they'll pull back and test it. And we actually pushed through this one twice and pulled back and tested it before it took off. Now, if he'd have traded this properly and just waited till prices got up here, he never would have got any kind of setup. It wouldn't have failed, and he wouldn't have had a failed, a failure of a trade right there. He wouldn't have had a trade that failed on him. But he went short in the middle of a range, and you just don't do that. You're going to get more failures there than anywhere else. So the way you trade a range is that you buy these lows, and you can use failures too, and sell the highs. And you might have, if you got a good failure up here, you might could have sold that. But in the end, we were looking for prices to go higher anyway. Look at this huge trend working up through here. And we had a break. At the very least, we're going to get a new high. But really, the market was so strong this afternoon that really we just had a new trend start up. This was just the middle of the pattern. Got a whole new trend starting up here, whole new channel. And then we had another correction on that. So much here, I can't even get it in here. Finally had a break of that one, and then had another one go on up. But you'll see that on strong trend days. You'll see multiple. You'll get a little correction that lasts an hour or so, and then the trend will take off again. So that's just common. But anyway, I hope that's clear on, you don't just look for second entries. I mean, there's second entries all over this chart, and a lot of them will fail. When you're in a trend like this, you're looking for second entries with the trend, and where are the best ones going to set up? At the key entry points off this trend line. So most of you just need to try to find the key entry points and look for entries there. This is a second entry right here. Notice this is a great second entry where at the key entry point. Notice you made the high here, you're working back. First entry, you're coming back, and you get a second entry right here. Now that's a matching low, so you can use this one as your signal bar. What you might do is let it break higher here and drop your limit order back here where one tick above that one, see if you can get a little better entry, which you might have. But on a really good trade, you may not want to risk that, and you just put your buy stop one tick above that and try to get in. You got a higher low right here, but this is your signal bar, and it's very bearish, and that's a little bitty inside bar. They're unreliable. I think somebody asked me about that trade too. It's a higher low, but I don't recommend that inside bar. It worked this time, but the next time it'll fail on you. You'd have been better off to wait on this one, because notice you got a new low and you get a first entry, and then you shoot up here and you get a second entry. And that's right at the key entry point. You got a nice bullish bar, and you could treat that one like a failed second entry, and plus it's bouncing off the support down here. So you could treat that like a failed second entry short, a double test of this low, and go long right there. And where does it go? Right back to the top, and then it turns down again. And notice right here, I think somebody else went short right here. They counted a first entry, and then it made a little higher low right there, and a second entry. I believe that's where they were. If it wasn't, it was a setup that looked just like this. And then they wondered why the second entry failed on them and went higher. Well, we weren't back to the high at the key entry point. If you'd have waited up here and went short right there, it was an easy trade. Same thing here. It came back. If you'd have went long right there, it's an easy trade. If you'd have went long right there, it's an easy trade. And you could have probably got a runner and ran this whole trend out here. It's all about the context and where to enter. So make sure you understand, especially the newbies, that people that are new and not real experienced traders. Don't just blindly look for second entries and things like that. I mean, those are great patterns, and they're magical, but only in the right context. And people don't get that. They think that second entries are the holy grail, and that they can just find one and they're going to take it and it's going to work. Yeah, they work so well that a lot of them might, but if it's not in the right context and the right location, a lot of them are going to fail. Here's one right here that's off the EMA and basically the midline. I don't have the midline on here, but if you put it in there, you can see that second entry right there. Again, that is an inside bar there. So it's not a perfect setup by any means, but it's still a second entry long right there at a key entry point that goes higher. So keep that in mind. Here's another good example. Notice we had an overshoot right here. First of all, you had an overshoot here. By this point, you probably got a good idea because everything's matching up here. So you got a good idea that's an overshoot. So that's already telling you, hey, the market's a little overdone. We're probably going to have a bigger correction here. So notice the new high, you pull back, you get a first entry, you pull back, and you get a second entry right there. But you're not back to the key entry point. You're below the EMA, you're below the midline. And so where are prices likely going here? They're going back to the trend line, the key entry point. That's what prices do. That's why we draw these things. Prices undulate back and forth from support to resistance. That's the basics of price action. They move back and forth between support and resistance. So after you come off the resistance, you're probably going back to the support. And after you come off the support, you're probably going back to the resistance. Then you're coming back to the support. Then you're trying to go back to the resistance. And notice it's struggling to get up there. Okay, that's a clue. We're probably going to get a break here and maybe a new high and a reversal. And we do get a break, corrects a little while, and then it takes off again. So make sure you understand that. And the key entry points are always going to be the trend lines, the support, basically the support and resistance, whether they're angled or flat. And you can also count the EMA and midlines in there as that too. They're less reliable, but they're key entry points all the same. They're minor key entry points is probably how I should describe them. So I hope that's helpful. But yeah, on the little deal I showed a lot of y'all, like right here is probably one. I don't know which way this broke first. But if this had broke lower and then turned and went up, you could use that for an entry if it's in the right place, if it's the right context. And this is the perfect context because it's off the support of a range, exactly where you're looking for a long to set up at. Most of the time, most of you would be better off to let this bar complete and go long just to make sure you're reading it right, because where's the one I showed you earlier up here? I think the guy, it was right here is the one he took. His actually, I can't tell if this one, make it bigger. Yeah, it did break lower and then it turned and went out the other side. Well, he saw that and he remembered me talking about it yesterday and he went long right there. And guess what? He got trapped instantly and it went lower. But that's not a key entry point. Not to be going long. This is what he should have been looking at right here. Put these trend lines on your chart. If you're new and you're not using trend lines, you're probably going to have a hard time getting the trend lines exactly right. But so you need to be putting them on here and working on it. But let me show you something here. You had this trend working up right there. And you had a break and a new high in place. And then look at this thing reverse. When it shoots right through that EMA like that, pulls back and turns down off of it, and then makes and everything's below the EMA, and you've got that trend line drawn right there, don't be looking to go long right there. You got to let this play out now. So anyway, plus even if you did, when you're going long, most of the time you want prices to be on the other, you want them to be on the upper side of the EMA. If you're going short, you want prices to be working off the lower side of the EMA. So look right here, that's pointing down, everything's underneath it. You're looking for shorts. Now it's pointing up, everything's above it, you're looking for longs. This was just a reversal point. And really we're just going sideways here. So you're going to indulate or undulate, however you want to say it, up and down right here until it decides which way it's going again. It decided it was going down. So we took a lot of the big picture back. In the big picture, this is a trading range. We had a breakout up here. And normally what you would look for is you'd look for prices to make a measured move. So the first thing you're going to do is measure that range and move this up. And anytime you got a measured move, the prices come way up short and then start trending the other way, generally what that means is you're going to get a big move in the opposite direction. And look what happened before too long. We had a huge move back down, and we took back half of the big move up. So we didn't end up here's where we closed yesterday at, well, I can't even tell where that is. We closed yesterday at 24.34, and by the end of the day, we weren't but about 30 points higher. So we didn't do much. Before the end of the day, it turned out to be a little bit of a dud, basically. I mean, 30 points is still an improvement and a positive day, which is good after what we've seen lately. But yeah, the one thing about measured moves is anytime you have a target and prices miss it by a long shot and then start trending the other way, there's a good, most likely that means prices are going to move considerably in the other direction, because that means this thing is weak. It can't even reach the target. And that could be the same thing to the downside. Let's assume we were traded lower here and we get our little target, and let's say we only got down about halfway and it reversed and started going higher. Well, the odds are we're probably going to go much higher. Failure to meet the target by a long shot is not a good sign, and it means the market that has lost momentum in that direction. So, but I've got a list of some things I wanted to see. I'm going to pause it just a second. Yeah, I think I've talked about most everything I wanted to talk about today. There's a couple other little things, and I may save those for tomorrow. We're already 20 minutes in here. I've been doing almost 30 minutes, and it takes forever to process and upload a 30-minute video. So I'd like to keep them down to about 20 to under 30 minutes, maybe closer to 15 or 20. But we've talked about some good stuff today. I'm just trying to think. It seemed like there was one other critical thing I wanted to mention to people. But the one thing I'm going to drive this home because I'm going to say it one more time. Second entries are great patterns, but they are not magical enough that can take them in any context, in any place, and always have a winner. They're not the holy grail that people think they are. They're a very important pattern in that right context, and generally at key entry points. So make sure again that you understand where are the key entry points. Look at this trend line coming down. There's no doubt where that trend line is every time, and look where all the big, this is what's so important that I try to show people. Look where all the big move, where'd the big move come from? Right off that key entry point. Look at it. Here's your next big move. Where is it? Right off the key entry point. Here's another nice little move right off the key entry point. Notice we're losing momentum here though. Look how fast that moved. Now we're starting to move a little less each time, and then finally we get a break. And so that's your first clue. Hey, we're probably going to get a correction. We might even get a reversal, but at the very least we're probably going to get a correction here before long. And we move to a new low and the market starts correcting. Turns out it reverses, but that's not to be unexpected, because in the big picture this is a trading range, and prices and the range was just a little higher. Once we made that low, you could have moved it up there, and you can see we got most touches right there. And so it wasn't surprising. Actually, I don't think that's even, now we still came up short. That's my blue line coming down there. It's so hard to see this stuff at such a distance, but we came up short, and that happens sometimes. And the fact that we couldn't get back down there and test that, those lows or make a new low, well, that tells you there's some strong buying coming in, and next thing you know, we reversed and we're going the other way. Let's look what a reversal looks like. When prices have been coming down, look again at the EMA. We put the EMA on here for a reason. It's a great tool. It's very visual. Look what, as long as prices are below that, we're still heading lower. Notice that we actually push through it sometimes once or twice or three times before we finally reverse. But when you see that first push through there, especially on a break on a trend line, that's a mental bell that goes off, says, hey, something's changing here. The momentum may be slowing down. We pushed through the EMA where before we were lucky to even get back to it. Now we've pushed through it. That's a important little clue there. And then notice we go a little lower and we push through it. We kind of move high. We get a little bounce. We come back through, and then finally we get through. And now look what happens. For the most part, we're all above the EMA here. Notice that we push through here a little couple times, and so that's a clue that, hey, we're waning on the momentum to the upside. And then the next thing you know, we're just going sideways. But the fact that we couldn't sell off is telling you a lot of buying coming in here. We're not pushing higher yet, but they can't sell this thing off. Eventually, it's going to break one way or the other, and we traded up into it. So what are the odds? We're probably going to break out successfully to the other side. That's what usually happens. Whichever way you trade into it, generally you'll trade out of it successfully that same way. It's not 100%. Nothing in trading is 100%. If it were, we could write a program and do all this and we'd never have to come to work and we'd just all be millionaires. But it doesn't work like that, unfortunately. So, but notice that first little push through right in here. And notice what that is. There's two-legged correction right there in an uptrend. So there's a good chance that might be the center of this pattern. So let's measure it and just see what we get out of that. And notice when we got to that, basically to the tick, it traded sideways for a while. But the market was strong and it pushed on. But that's probably why it's selling off. There's all the smart traders that's the target and they're exiting. But when it doesn't sell off right there, too, when it doesn't sell off, then hey, that's a good clue that we may be going higher. And notice we're back above the EMA for the most part. We push through once a little bit there, and then we finally get a little correction, and we're all back above it again until we push through a little bit. So hey, there's your little heads up. We'll probably turn in a little bit, and sure enough, suddenly we're rocketing the other way. Draw your trend lines. Really, this one starts here. And that's really how that trend line is drawn right there. And somebody will ask me, well, why'd you draw it right there? Well, because it fits right there for one thing, but secondary, that's really where the downtrend started. We started lower from right there. And you can see we're working down. You get a little close outside. Is that convincing? Maybe, maybe not. I will say this about it. It's a little two-legged correction. That's a second entry short. Great setup, great signal bar. And I would measure that to right there where that little second entry is and say, hey, we're probably going to at least get a measured move from there. And lo and behold, we might go a point lower and then it's shooting straight up. But notice that low, first entry, and then when it breaks below that big bearish bar right at the key entry point, right under the But notice how we're below the EMA. This is when you start swinging back and forth above and below like this, it's sideways stuff. So start looking for the ranges for the support and resistance that are horizontal. So that EMA is a tool. So make sure you understand that. But hey, we've made 30 minutes after all when I'm trying not to. Once I get to talking about some of this stuff, it doesn't take long to eat up 10 minutes. So anyway, I got a couple of other things we'll talk about tomorrow. I'm going to talk about tick charts versus 5-minute charts. I'm going to talk a little bit about Forex and spread betting. People are coming out of the woodwork trying to Forex and trading Forex and spread betting, and I'm going to talk about those tomorrow. I don't have time today, I'm sorry, but I will talk about them tomorrow, I promise. But if you trade either of those, you want to listen tomorrow. So I'm going to leave it at that. But I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.